Welcome everyone. I'm glad that you've taken the time to come and learn a little bit about how we can use crypto in real world assets, such as cars and real estate and other things that you may be interested in purchasing. I'm going to quickly flick over to Luke and let him give a brief background on why and his expertise in lending and what he's been doing in the past and how he's come to partner with Helio Lending. So Luke, do you want to give a bit of intro?
Fabulous, thanks for having me. Yes, I've been in the broking world, I suppose, for 10 or 12 years now, based in Australia, coming from the UK. And it went from being one piece of asset finance and car finance, the usual easy stuff, to working out that there are a whole avenue of different funding lines when you know your client. And that might be trade, it might be secured real estate, it might be when the banks say no, which is the key point to everything here. In Australia, and it's very similar narrative in the States, there's 2.5 million SMEs, small, medium enterprises here, and they create all the innovation, they take all the risk, they employ all the people, and still when they need the support, the major banks call them, they say no because it's too much risk. I love finding a way, the private lending market, any sort of vertical of funding. There is so much out there to give the spotlight back to those small, medium enterprises that keep our countries moving. So that's where I literally just push my life, the more lending verticals. And that's how we've drawn on to John and I being together in a couple of partnerships around this crypto space, because I find it fascinating. And that's sort of where we land, John.
Yeah, and it is very exciting. And so we're going to cover off some real examples today. So we're going to get practical. We're not going to take a lot of time going through all of the technical stuff, but I am going to give you a bit of an overview. So let's get this started. So the start is what makes us different. And the difference is we have a panel, so we're an aggregator. We have 9 panel of lenders on our solution. So if you come to us, we're pretty much going to be able to fit in a solution that suits you. We can do loans, deposits, and obviously the real estate. So let's give it, what's that mean? How does that work? So here's an example of 5 options that we could bring to you. So if you're coming in with $100,000 or $10,000, we would then work out what it is that you're requiring. So these loans have different types of options. So the first one, great product, but it knocks most people out because you need $1 million. Okay, so that brings us down to the next option. The next option, which is, has a very, very low interest rate, but again, has very, very high qualifications for the individual to be a professional investor. It is a guaranteed no margin call and so forth. So then you come down to the majority, which is the bottom 3. And we do have 9, but I didn't want to put them all on the screen because it takes up too much time. So what we're looking at is you're looking at a LTV of between 35 and 70%. So that means that if you did a 50% LTV, you'd have to put up, an example, $100,000, we would give you $50,000 in cash. And you're going to be looking at interest rates around the 10% mark. To think of anything lower is going to be difficult. So you're looking in that space. So that's where we go through. One of the really important things is security. Okay, it's the number one issue we always get asked about. What's going to happen to my crypto? Who holds my crypto? The really important difference between a lot of providers out there that will work with you will actually take your crypto and then pass it on to a third party. In this case, we're actually giving you the direct introduction to any one of those options. So option 1 right through to option 9, you get a personalized introduction to the individual, to the company. We hold your hand through the process. We hold your hand through KYC, and we walk you through that. You don't pay any more by using us because the underwriters pay us directly. So if you go straight through the front door, you'll pay exactly the same as if you come through us. But the difference is we're going to help you navigate some of that path. So this is some of the examples. How does that work? We work out the determined loan structure, what it is you're wanting, and for what purpose. We do the KYC and AML, which is very easy these days. It's normally all online from most of the providers. We make a decision, and approval then is done within 24 hours, and funds are transferred. You'll be able to see your portfolio on the real screen, and I'll show you that in a minute. You'll actually get to see that. So it's a pretty standardized process to go through to open an account. I always try and speak to our clients and say, don't go any higher than a 50% LTV. It's exciting to be thinking, okay, well, I can get 70%. But the reason being, and this is a practical example of a client that took out a loan earlier in the year. Crypto was at below its high, so it wasn't at its high, it was below its high. If you took a $100,000 loan with a 70% LTV in this example, and the price of BTC was at 52,000, well, sorry about that. Previous slide. And the price of BTC was down in here where you can see my cursor. Okay, this is where it's taken off. So it's gone up and it's come down. Okay, so at that point in here, you'd get a small margin call, but by the time it actually triggered, most likely you would be back in the money and you wouldn't have had to put any money in, because it gives you a little bit of, like 24 hours to some cases a little bit longer. But in here, you've actually gone into margin call. And through that whole process, at the worst case scenario, you would have had to top up another $30,000 to have kept your crypto. Now, that's fantastic. If you've got the funds and you want to do that and you want to put yourself into that position, not a problem. If you had done a 50% LTV, it would never have been triggered. And you can see here the green line. Now, that doesn't mean that it's not going to be triggered. It just means that you don't have to worry about it in most market circumstances. So my preferred model is to get everyone on a 50% LTV. And you get better rates at 50% than what you do at 70%. So that's a practical example of how these margin calls work. Some really quick, frequently asked questions we're going to go through, because we're going to get right into Luke's story, which I think is exciting. Do I still own my crypto during the loan? Yes, you do. But technically you've handed it to a third party. No different to a home loan or a car loan. You technically own it, but you've actually passed the asset to another individual under the terms and conditions. So it's no different to a home loan or a car loan. So exactly the same situation. Collateral held in cold storage. This is a little bit of an and/or. Some of your crypto will be held in cold storage. And so that which is held in cold storage would be insured. If it's not in cold storage, then it won't be insured. So you need to understand the difference. The reason that not all of it's in cold storage is really the next question. Is my crypto repothecated? Repothecated is a nasty word, but basically means, do they reuse your asset? Do they take your asset and then reuse it? Majority of underwriters will reuse your asset, and that's where it's not in cold storage. So the reason they're able to give you such great rates of 10% on an asset, which is still classed as quite risky, is because what they do is they take that underlying asset and then they will reinvest it, and they'll trade that in other markets. And so there is an underlying risk with that. But at the end of the day, the providers that we've done and chosen are all the top providers in the market. So these are the ones with the most collateral, the most asset backed, and are the ones that are really substantial in their compliance and the way in which we do it. So we don't have anyone on our panel which is a small provider which may have great rates, but doesn't have the gunpowder to be able to stand up in a downturning market. If the price of crypto goes down, obviously, in the margin call facility, you have to top up. In the event that you don't top up, then they'll close your position and you have lost your crypto. If the market goes up, you keep all of that asset. So all of your asset will be kept, and I'm about to show you a slide on how that works. So here is a practical account. This is how your account would look. And if I just go through this, you can see that the total value in this client's account is $52,000. This is US dollars. Down here, they've got a loan. So this loan originally, when it was taken out, was a $10,000 loan. So collateral has gone up. And so if you look at it, the loan outstanding is $1,150, $11,250. That was the total loan account. So the interest at 12% on 1 year loan at 50% LTV was 1,250. So the balance is the $10,000. You can see though that because the market's moved in a positive since this client took the loan out, which was over only a month ago, their total collateral now is 22,000. So if they were to close out their loan today, okay, they would get half of their crypto back and invent that cash. They wouldn't have to pay that cash back. So that's another way. And I leave all my loans for over 12 months and allow the market to really work those loans. So again, try not to do short loans like 1 month, unless you're a day trader or you've got some specific reason, but lock them in for a longer period, let the market do the work for you. All right, this is the exciting bit. How do we apply this to real world market? And we've got a couple of clients that we've worked with in real estate, and crypto seems to be a really, really hot spot at the moment. And I guess it's taking a high risk, high growth asset and diversifying that into real estate. And so we want to talk about today is how we've practically done that. So Luke, do you want to go through your experiences and how this has worked and in the real world for yourself?
Yeah, definitely. So I'll take a step back for a moment. The elephant in the room in Australia is really a couple of years behind other places in the world in terms of take up of these digital assets, digital currencies, and the trust behind it. And we're still in the doubting mode, we call it in many cases. Now, what that is crypto media might generate some negativity around certain areas of digital assets and worry, I suppose. And I relate it back to only 10 or 15 years ago when we started doing online banking on your phone. And the immediate pushback was, hang on a minute, what's going on here? I'm not putting my money on my phone. What if I lose my phone? I'm going to lose my money. Or what if someone hacks it or whatever else? And it's just a piece of trust that takes a while to generate and until it becomes mainstream narrative. In Australia, we're very early in the piece here, which is why it fascinates me, because I'm watching what's happening all over the world. I'm not a believer in a single coin or whatever else. I certainly can't advise on that, but I am a believer in the blockchain and the movement of monies, because I'm so entrenched in this whole banking world, especially for business owners. Let's say you go into a bank and you have to give your financials and your tax returns and your this and all these different pieces. It's same all over the world, whatever they're called. And the bank takes 30, 60, 90 days to go through a process, and then you might get a credit person who then puts a judgment on it. Now, this seems to be rubbed over in this crypto world. It's a case of pure asset-based lending, and that's what I find wonderful, and that's the real opportunity here. We've got so many wealthy, digitally wealthy 21-year-olds who have spent the last 4 or 5 years engrossed in this space, who have generated income. They don't have a full role, and they've got $1 million in crypto, and they don't know what to do with it. They can't do anything in the real world. John, you mentioned this real world versus digital. It's such an interesting play right now. So to be able to leverage from that is absolutely necessary, because there is wealth there. 10 or 15 years ago, a self-made, let's say 20-year-old couldn't have generated $1 million without working. It's just not feasible. Or 500K, whatever the number is. It's an amazing time. So we have to find ways of getting their funds into the real world so it can be spent on our country's economies and usable money. We've put a few narratives out and just dipped our toe in the ocean, and it's been pretty successful along the road. All the information that is required here, a broker, a financier, is receiving the majority of that anyway. It's just a case of analyzing that little bit further. And rather than bank 1, 2, 3, 4, again, we've got nine lenders, or access to 9 lenders here. So there is market, there is accuracy. It's all about the client. So we just have to provide trust in the space. And I'm not a part of any of these lenders. I just like doing the right thing by clients and allowing them to have the money they need to grow. So I'm in on it. I'm comfortable with the security. Now we're doing things like bank statement analysis. Again, 5 years ago, that was I'm not going to log into my bank to get a loan. I'm not going to show you my bank statements or my business banking account to get a loan. So it's all a case of transitioning through to a new normal. A client here had a fabulous opportunity to purchase a commercial property. They were going to put some money into it, make it all look nice. It was going to be the real marketing tool for their business. Except they were short. They could access 80% lending up front from a regular type mortgage, a long-term mortgage. They were short a bit of cash. They were short a bit of development funds to make it look fabulous, so they can then either sell on or refinance down the track. And we just went in a bit deeper. The couple who were in charge here happened to have some cryptocurrency holdings, and again, this was the first major loan they've done in the real estate world. They've taken little pieces here and there from a couple of the platforms, and these guys I see as the pointy end. But they were still dubious. It was the trust we still had to build up, and we still had to go through options. And that's the nature of the beast right now. It's just about calling the taboo subject and putting it out there and discussing it, much like we're doing now. So it becomes a norm because it's so powerful. We advised that the lower LVRs or LTVs on the loan are absolutely the way to go. It's almost like a group thing, we don't want any bad news stories, because imagine when you have online banking and someone gets hacked, it's a bad news story that rubs out the good news of another 1,000 different processes or applications. We don't want any bad news stories. We want them to be very well justified. Only a little while ago in the UK, the banks were doing 107% LVR mortgages on houses. And that looks crazy. That was 5 or 10 years ago. That's crazy. But they were doing it. And no one batted an eyelid. People were taking the cash and doing their thing until the property market moved. So as long as you're smart with the LTVs and you're not sort of over leveraging and trying to make a miracle out of not much, I think it's a really fabulous way of bringing income into the real world, into the touchable, tangible world. So in this case, the client used a number of $100,000. They'll probably draw down on more as they develop their property more. It's on a short-term loan. They're going to leave it in there and let the market pay for it as much as possible, of course, as much as possible, and realize the income when they resell their property that they've added, well, they've doubled in value over the next 12 months with development. It's a fabulous way in. Without the crypto lending, John, they couldn't have attained what they're looking to do. Their business couldn't have
made the next steps. No,
absolutely.
And also
right.
The fact is that we held his hand. So the first loan he didn't necessarily qualify for. We went all the way down the road with it, and then we had to redo it. And then tell us about the experience of how quickly he did the loan and went through that whole process, and how quickly the funds were transferred.
No, correct. A top tier bank, it might take a little while, and it's a great rate, and that's what you go for. But as we all know, in the real world, sometimes you don't get the best banking product, the percentage on the marketing tool on the internet. You don't get that often. So that's the piece where you need support, because all of a sudden you're lost. So we went through all the other lenders, every other option. Again, trust, comfort, discussion, knowledge in the industry, knowledge in the space, knowledge that we can put you into something for a period, look at the market, and whenever it's ready to do something else, we'll move you on to another product, much like in the banking space, much like in what we currently know. The fact that it's digital is just the next step. Once it was secured and we'd engaged and we were comfortable with that amount, there was no checks in the mail. There was no transfer.
We're actually on the phone with him, and he said, "Oh, the funds have already transferred."
Absolutely,
it was that quick. It was like took 5 minutes.
The Australian banks have got hundreds of billions of dollars sat in these overnight transfers, all earning 1% day rate or whatever the percentage might be. This was so quick. It's about the client. It's about the lender giving money to the client rapidly, and I love that. And I think this blockchain movement of wealth, of money, of assets is fascinating.
Yeah,
is fascinating.
So this client we took from, who's a landscaper who wanted to develop a property. He was basically short, but you asked the fundamental questions: do you have any other assets? You unfolded the fact is that he was sitting on some crypto. he sort of knew about the lending stuff. He was what I would call educated, sophisticated, but was uncomfortable about the security. We gave him the introductions and we really held his hand. And now he's been able to basically fulfill his, landscaping project business because we're able to, release some of those assets. Now, I, for an example, release assets like this where if I buy a car, which we're talking about, will be done with a crypto loan instead of a traditional loan. Because then I actually have my asset on one side being the crypto and the other asset being the car. And so I've now got two fundamental assets, one which is probably going to depreciate, but I get to drive around in. The other one's going to most likely grow, but I don't get to utilize it in any other form. So it's really taking that crypto and diversifying it. So it doesn't have to be just real estate. It can be, my first loan was school fees. I love it because basically what I do is I allow the school fees to be paid by my crypto loans. And as soon as it gets to over, 100% growth, I close it down. Now, yes, I don't keep as much of my asset in the crypto, but I also didn't pay for my school fees. And I can tell you there's a lot of people out there that would love that model. So this is the exciting opportunity, is diversifying, looking at how you can utilize an underlying asset. We take all the major assets, major cryptos. So
yeah, it's an interesting space, John. I've always had the mindset that in business, in the commercial sense, you finance what depreciates. If they're tax effective, you finance assets that are depreciating and you put your cash into appreciating assets. So when we're talking these crypto loans, I mean, let's use a holy grail of an example here. We are financing the depreciating asset, let's say a car, but then the holy grail is that the market actually pays for it to some extent. Now, if you're leading into a bull market, that's sort of I'm fully aware it's not always going to work quite as simply and as beautifully as that, but
no.
It's a possibility. We've got clients looking at buying, passively Lamborghinis on their millions of dollars worth of crypto, and hoping that coming into the bull market that they're backing, they're going to have to pay for half a Lamborghini, for example. It's fascinating stuff.
Yeah, it is. It is fascinating, and because I've practically been doing it with assets, and I now won't buy anything unless it's done through a crypto loan, just purely because I have both of those assets working. Now, in the event that the market drops and goes below my LTV of 50%, then I have a choice at that particular time. Do I walk away from the crypto and keep the underlying asset that I may have paid for, which is a car, property, or school fees, which is really not an asset, but do I walk away and say, okay, well that's covered, or do I top it up and keep it and ride it through? It's no different. If property market drops, the banks are going to ring you and ask you to top up if all of a sudden the margins, no different to anything along those lines. So it's the same process, but you're using an asset which has got fundamentally a lot more potential of growth. So
you're absolutely right. That it's just being smart, isn't it? It's being smart with that LVR. Exactly what you've just said. And 10 years ago in the UK, they're offering 107% LVRs or LTVs on properties. If we're treating $1 or $1,000 or whatever it is in the crypto space, in the digital world, as an asset, that's the mindset. It's an actual asset rather than it being this hypothetical fund. If we're treating it as an asset and we're being smart around the lending of it, absolutely no different to the banks.
So some of the other stuff that's exciting that we're working on, I'm just going to top onto it just before we get into any questions that we may have, and obviously introduce Franco in a minute in regards to your contact and with the company. But one of the things that we've also been working with at the moment is NFTs, and so where you can take your property and put it into an NFT and therefore make that a real digital asset. And so there's some of the things that we're talking about and some of the things that we're working on as a company. So we're very innovative, but I think we're sort of old school as well, and that is that we hold your hand. That client, the landscaper, he got actually physically spoke to the underwriter. And so there's a lot of comfort there. And so we can do that. That's where we sort of sit in our space. Ian, is there any questions there?
Yeah. So we got a couple from Taran. So he says, can I please ask, how do we lock the collateral that the person gets to Helio, and how does Helio know what that money is being used for?
Good question, actually. So there's two questions there. One, you will actually have your own portal and your own application that you could view your position 24/7, like that slide that I showed you earlier, which was actually a real client slide. That was taken out of a portal. So that's a screenshot. So the first bit is that you'll see the collateral. You'll see your positions in real time, so as the market moves. The second part of the question, which is really interesting, we don't really care what you use the funds for. We're not doing a traditional lending where the bank says, okay, well, I want some money to do my renovation, and they actually want you to give them a renovation plans, or they actually only allow you to lose the money for that, or a car loan where you only can use the money for a car loan. Even shares, you can go to the bank today and get a share portfolio loan, but they'll only allow you to buy certain shares. So they're not really, they're so controlling in everything that they do to minimize the risk. And the reason being is that the asset is not as liquid as they would like. And so with crypto, the asset is very, very liquid. And so they can position it very, very quickly if they need to get out of the market. So fundamentally, you're never going to be asked what you're going to use the funds for. They may ask it, but it would only be because compliance of, old school. But I've not seen yet anyone care what you use the funds for. They do ask from time to time, where did the funds come from? And that's purely because money laundering, criminal activity, those sorts of things. And so there is that rating, but that's as much as it goes to. So, yeah, great question.
Okay, and Taran's got a follow-up one. If someone defaults on their loan, would Helio have access to collateral to sell in the market to liquidate?
Right. And again, Helio itself doesn't take any of your funds. We pass it to a third party, and you'll get introduced to that third party. So I want to make that very clear. So we're acting on your side, not the lending side. So we're always on the client side. And so you will have a choice before liquidation. So you will have that choice to say, I want to top up or I don't. In the event that they liquidate, the underwriter will make their own decision whether they're going to actually sell your position or keep your position. But at that particular point, you've already lost, you've already handed over. So if it drops by 50%, at 51 or 52%, when it's dropped, or 49%, you'll have to say, well, do I want to put another couple of $1,000s in, or do I want to walk away? And if you walk away, you walk away. That's it. No one's going to ring you. There's no margin calls. No one's chasing you for money. It's real time. So, I used to own a stockbroking business, and we were always ringing clients to top up when they were going to margin call. And some of them would go through. So what we would call that is that they would go through the floor, and they'd move so quickly that the client would be in a negative of, let's say, 10,000 or 20,000. We would have to ring that client and ask them to top that up. Now, in most cases, the client wouldn't top it up. They just say, well, that's not my problem. So in this, it's very quick and very fast. So you'll either get an option to margin call up, or you'll just walk away.
Interesting question. How do you think the outcome of the Tether and Binance investigations will then affect the value for cryptocurrency? This could be potentially a loss of many billions of US dollars, as many are speculating.
Oh, first of many.
I'm not going to get into giving financial advice about a particular cryptocurrency. What I will say is that the markets love rumor and love what would you call the negative side of the story. Binance, these groups are very, very substantial in their own right. But let me give you an analogy. What will actually happen, and this I believe will be true. To the future, the same cryptos that you currently see today will not exist. And it's no different. That doesn't mean that they're all not going to exist. It means a lot of them won't exist. And if we take a practical example of that from the internet, and we look at all of the ones that were the telecommunication companies and all of the ones that were very successful, once the internet came in, a lot of them got eaten up. A lot of them didn't. But a lot of the internet companies that were starting up were all fantastic. They don't exist today. And Apple was not the first company to do mobile phones. Google was not the first company to do search engines. Yahoo was not the first. So you've got to understand this will move so quickly. So to worry about what Tether or Binance or Bitcoin are going to be doing, my philosophy is stay with the safe ones. Yes, you're going to lose a little bit of the upside, but you stay with the safe ones and you'll move. As an example, I don't buy Bitcoin anymore. Now that's where I started, but I believe it's had its day, and it was a great champion and was a fantastic coin, and it's still a fantastic coin, and it will be gold to the future, and it may survive. But in 10 years' time, if we were sitting here, you might be saying, "What's Bitcoin?" It could be that dramatic. It could be completely wiped, and so. Because something newer and more advanced technology will come along, and that's what you've got to understand. This is growing so fast that to worry about what's happening in those little dynamics is I believe fundamentally flawed. What we've got to do is to go, this is going to last. Which one's going to be the ride to continue on, and that's going to keep changing. So, I hope, Luke, did you want to say anything there?
Yeah, you're absolutely right. And there will be stories. There's always investigations going into banks or markets or share portfolios all the time. And there's a couple of billion wiped off, much like there will be in the crypto space. There'll be lots of this to come, but it's no different to the regular transacting world at the moment. As you said, things will come, things will move, things will get forgotten about, things will get rubbed over. But there is a lot of misinformation on the internet. I think that's the major piece that is different to simply the banking. I find the banking more tangible, the information. But again, not really. There's this whole host of investigations that impact all over the place, but then you still go to your bank and take your money out. The blockchain itself, the movement of money in a digital sense, the movement of wealth, assets, it makes sense. So when it makes sense, rather than the coin itself, the actual whole industry, the whole movement, that makes sense.
Okay. Couple of similar questions have come in. How long can I hold a crypto loan? And the more specific question was, with mortgage and auto loans, we usually see longer terms like 5, 15, 30 years, etc. from banks. Is that now, or will it be possible to have comparable terms on crypto-backed loans used for real estate or auto purchases?
Yeah, good question. The loan terms have started to be they started off being quite short. Even day loans, and this is what you see the major providers with these micro lending. The average loan size is around about 6 months. I lock all mine in for 1 year. You can go longer than that. You can get a 3-year loan. My feeling is that there's no extra cost. So you lock in 1 year and then just keep rolling it over. So it's exactly the same loan. There's no charge for entry or exit. So you can really lock those out, but they won't sell you a long-term loan at the moment, anything longer than 1 to 2 years. Because the market's just not mature enough to work out what's going to be happening. And I fundamentally agree with that, because 1 year in crypto is a long time. And so you may not want to be sitting on the coin that you initially did the loan with in 3 years' time. You may want to swap that out and transfer it to another. So if you're locked into a loan, although you can get out of those loans. But look, I really want to thank you all for taking that time to come and hear us babble on about our exciting opportunities and utilizing crypto. I want to just quickly, Franco has been sitting there quietly, but he's the person you can go to. Here's all his info. Franco, do you want to just say a few words of how you look after clients?
Yeah, I mean, you know, especially with the real estate, I'll give everybody one example, and that's really pertains to the last question that was here. What we're seeing in the real estate market right now is, if you're not a cash buyer, you're probably not going to be a player. So the way it stands in is you're leveraging your asset, as we've been talking about. Now you're a cash buyer. Once you own the property, whatever it is you're buying, you can go then take a more traditional, longer term loan out on that one, pay off your crypto loan, and now you've got your asset and you've got your crypto. So it's really just another way to leverage what you have to make your investments. That is what I am seeing the most of right now, or what I'm hearing the most.
Yeah, fantastic.
Of right
All
now,
right, guys.
especially to property, a full transaction. So
yeah. All right, so thank you everyone for taking the time and energy. Thanks, Luke, getting up early in Australia, although you're up early most mornings anyway. Yeah, please reach out. No question's a stupid question, and we really thank you for taking the time.
thank you.
Thanks, team.
Thanks, guys.